Hey guys, our portfolio is up $24,000 this month. And in this video and portfolio update, I'm going to show you what we did to make it happen. First, I'm going to show you some of the swing trades that we took. And then next, I'm also going to go in depth in this AMD covered call that we made. It was a couple of months that we were in this covered call trade. And I'm just going to show you why in the end it turned out perfect. So first things first, let's get started with the swing trades. So I'm gonna pull up my trading journal. As you can see, we've had a bit of a pause in April just because the market was bad, Trump tariffs, and you get to really see on my Excel spreadsheets where we took the damage from Trump's tariffs. So looking at the swing trade profits that we made in 2024, November, we made 680. December, we made 2,500. 2025, January, we made 1,800. February, we made 1,500. March, we only made 126. And this is when the effect of Trump tariffs really hit. And in April, we made nothing. But May was a big month for us. We made $2,500, and we're expecting a really big one in June as well. So the trades that we took, how this spreadsheet works is if you look at where my cursor is, this is the column that tells us when the day that we close a trade. So henceforth, this column is called close date. So the first one that started in May this month was this one here. And if you saw, this was a Microsoft trade that we started on January 30th. We had an average cost of $30.23, and then we closed it on May 1st, making a profit of $164.60. And that was an 119-day hold. The next one we took was a big one. We started a position in YTSL on February 25th, which was basically a Tesla ETF that also paid us monthly dividend. We had an average cost of $18, and I believe at some point my position was about $12,000. We closed this on May 14th, 2025, and we made a whopping profit of $1,748.64 when we sold it at $21.76. This was a 109-day hold. We have a few smaller trades. RDZN. We only made a profit of $28, but this is actually a 4-day hold. We opened it on May 16th, closed it on May 20th, and as soon as we bought in at $1.08, it just kept going up to $1.29. And actually, this was taken on a Friday, so the reason why it says 4 days is because we included 2 weekends when the market actually wasn't even open. So this is more like a 1 or 2 day trade, but we're going to just write 4 days because we count the weekends on the spreadsheet. Another one that we had was BBAI. This is actually a very long position that we've held. I started it back on March 4th, and this is right before we had the Trump effect on the stock market. So we bought in at $3.94. Actually, we bought in at $4.28. I had to dollar cost average it down to $3.94. And then just earlier this week, we finally closed it on May 27th when we sold it. Only made a profit of $8, but what I really like about this trade is not the dollar amount we made. It's the fact that we just don't lose trades. So even when we get into bad positions, and those of you who are familiar with getting into many trades where you're in the red, where you're holding the bag, this is a classic example of how you can actually get out of a trade like that and not lose any money, because it's only real if you sell it. And those of you who've been following me, I basically never sell a loss. So I create these plans to ensure that that these stocks do eventually go up, and then I sell them. 2 more trades that got announced. NVHE, we started on January 27th. Closed it on May 28th. We made $546.24. So that was the second biggest trade we had this month. 919-day hold. And lastly, just on Friday, this was actually just like a 1-day hold kind of thing. HIMS, I got in at $52.46 on Thursday, and then on Friday I sold it at $56.96. So that was a 8.5% gain just holding it for less than 24 hours. The funny thing is, I actually didn't want to swing HIMS. I actually wanted to build this out into a long-term position, but there were two reasons why I got out of that trade. First reason, I did see a double top on the daily chart for the stock market, and I just thought, it's keep going up right now. This could go down on the weekend, next Monday, whatever. Might as well, have a good weekend. Don't put myself in that kind of pain and risk. So I just took it out. But I just felt like in that situation, there was no bad choice, because even if I held it, I know in the long term that HIMS is going to go back up to $60, $70, $80. But I just felt like making this into a swing trade. So I only took my profit of $22.50 and I kind of moved on. So these are swing trades that we made. And in total, we made a total profit of $2,517.98, which is our biggest month so far in terms of swing trades. All right. Next thing I wanted to show you guys was this amazing and insane cover call that we've been playing since back in February. So before I just show the trade, I'm just going to give a bit of context, okay? So basically this is what happened. So those of you who are new to the channel, around February, January of this year, I had a relative who actually transferred some of their funds and their investments to me to manage. So before I came along, they were managing themselves, and it wasn't doing very hot. Basically, they got into some stocks, including this AMD position, at a huge red. So they bought in at $108.52. I'm just going to write that in. And then the market just tanked after that with the Trump effect, going as low as like $90, $80 for AMD. But they bought 100 shares. So they were kind of in at like $108,052. That was a big investment, right? And they were basically just like, okay, what do we do? What do we do? So when they transferred the portfolio over to me, I thought, AMD wasn't going to recover in the next month or two. There's absolutely no way. At that time, if you remember, AMD was on a downward trend in the charts. And also, secondly, we had the Trump effect come into play as well. So those two combined, I just didn't feel good about like holding it and just doing nothing with it, or selling it as well, because then we actually, realistically take that loss, right? Whereas if we don't sell, the loss is only on paper or on the screen. So what I end up doing is I just end up doing selling cover calls. So the first cover call that we did, this was when the price was really bad. We sold it for a premium of $25. Okay, so therefore the total gain for this one, and I actually didn't really write this in, $25 premium for the first AMD cover call that we sold. All right. So when the expiry came, it didn't hit the price that we had to sell. So we kept the shares, and then we sold it again for a second time, AMD. And this time, the price went up. So this time we were able to get a premium of $147.25. Okay. And so now we're up about $160 in terms of collecting premiums. The price still hasn't really moved. The price has moved up, but it hasn't got to a point where, we can sell out this position in the green. We're still deeply in the red. I'm guessing this is probably at like $100, $102 or something like that. So this is the second time that we sold cover calls, and then it didn't get exercised again, so we kept the 100 shares of AMD at $108.52. Now this time, third time around, I basically sold a cover call and made it go out about 30 to 40 days. And this time I did something different. The strike price was a little different. I did a strike price of 109 for the first two trades of AMD cover calls that I was selling. Okay. Just because, with a lower strike price, I can get a higher premium, right? But now because the price has gone up, on the stock price of AMD, I felt like, maybe in the next 30 to 45 days, AMD could actually have a fair chance of rising above this 108.52 that we originally bought it at. So I decided to switch it to a 110 strike. That way I can capitalize on the gain of $108.52 to $110. So we collected a premium this time of 110 calls on AMD at $243.25. This is the biggest. Premium that we've collected so far. But you see how, like, if I never did any covered call sales on that and just waited for a stock to turn red to green, I would have got zero, right? So scenario one, I'm going to write this out. So scenario one, right? I did nothing. Well, basically, I would wait until AMD go up, right? And in the 3-4 months that I had to wait for it to go up, I earned $0 until it breaks even. Okay. And then scenario two was, I never bought, or my relative never bought never bought AMD. Then that's also no loss, and I probably sleep very well during the last couple months. But I also earn, $0. But let's continue the story, and we're almost at the end. So I sold cover calls not twice, but 3 times. And the third time I collect $243, which is a great premium. And this AMD call, 110 call, was going to expire on May 30th, Friday, basically yesterday. All right. And the craziest thing you would not believe, let's look at what happened on AMD. All right. AMD stock. Let's see what happened on Friday. Okay. So in the last 5 days, now, if the option expired at like 115, like you see here, Wednesday, May 28th, it was actually 115. That would have been bad for us because, well, we sold at 110. We would have to sell at 110. So we would keep this $140 of gain going from $108.52 to $110. But we wouldn't actually capitalize on the gain from going from 110 to 115. But sure enough, that's not the day that our option expired. It expired on Friday. And from between Wednesday and Friday, AMD stock went all the way down to 110. So if we look at the last day, this is what we were seeing on Friday. It started at 111 and it creeped down. It started to sell off. And when it was in 110 range, I was saying this in my Discord, man, if this market today closes at 110 with AMD, like I will be speechless because that's the most perfect situation. Because let's actually break this down. Let me go back to the Excel sheet and let's break this down. So why would ending at 110 be the best thing for us? Well, anything over 110, I'm losing on the gains, right? If I sell at 110 on Friday, May 30th, and AMD gets to 111 or 112, 113, I don't get the gain from 110 to 111 or 110 to 112 or 110 to 113, right? So basically, if the stock somehow on that day closed at 110, that would be perfect. Now, you might be thinking, wouldn't it be perfect if it's at 109 because you get to keep the shares again, right? Well, you have to remember what I said from the beginning of the story. I didn't want AMD at 108. I want to correct my relative's problem, which is buying AMD a little higher than what we wanted, right? So here was me selling cover calls to salvage the situation, not necessarily, make, this crazy prediction and, somehow on the day that AMD gets to 140, I'm to sell. That's not what I'm doing here. I'm basically trying to save the situation. So in the end, it went to 110. Let's see the Google price. It closed at 110.73. So that means if you multiply by that 100 shares, we lost $73 because I had to sell at $10, right? So at 10.73, I lost I lost $73 selling these covered calls the way to play and the way I did, but I gained. What did I gain? I gained $24.25 the first time I sold it. I gained $147.25 selling covered calls a second time. And then I gained a $243.25 selling covered calls a third time. And I also gained the movement from $108.52 to $110, which was when you calculate there, it was $148. I did a calculation already beforehand. All right. So in the end, I gave up $73 to make $562.75. So that was amazing. This play couldn't have gone any better. And instead of just waiting until AMD went up to the certain price, as if I'm going to pretend I have a crystal ball and I don't, right? We were able to make passive income of $560.75 US dollars. By the way, I am Canadian, so $562.75 US dollars means a lot more to me as a Canadian than it being Canadian dollars. So that is the cover call play that I want to show you. And yeah, this is part of the reason why we're up. So one of the most proudest thing that I've achieved since starting this $100,000 to $500,000 portfolio challenge is not necessarily the biggest number of gain I made on a trade, or how big this portfolio is basically growing. The proudest thing is that if you guys looked at my swing trade entries just now, I don't take a loss, and that's consistency, right? Maybe if I swung for the fences a little more, I may take a few losses, but when I do hit on a trade, it's a big one, right? And maybe in that scenario, I might be making more money in the long term. But actually, what I'm just looking for is consistency. When you have a $300,000 portfolio, I think consistency starts to outweigh a big gain on a trade. If I had $10,000, right, going from $10,000 to $15,000 in one trade, that's big, right? I'd be a lot more interested in that scenario. But when I'm at $310,000, there's less room for risk because you have so much more to lose when you make a bad trade. I'd rather take safe trades, but earn incremental amounts as opposed to making one big trade here and there, but also taking a bunch of losses on the side. So yeah, these are the two things that I want to show you. Before I end this video, actually before I go anywhere, I just want to show you the AMD thing that we did. So you can see that what I'm talking about here is completely legit. May 30th, yesterday, those 110 calls were sold out, reassigned because they were above $10. And if let me see if I can go and just filter for AMD. Yeah, so you can see that everything I'm saying is exactly that's been posted on that Excel entry is actually in my Wealthsimple. So yesterday I sold them out at a $11,000 value, but May 7th was when I collected the $243.25 for the third time that I sold the cover call. March 17th was when I collected the $147.25 for selling a 109 call. And March 7th was when we first got into this option selling racket. It was only, $25 because I think at that time AMD just had a very, very low price. All right. So I'm going to end the video here. And then if you're interested in following this portfolio, I believe this is probably one of the best ways to learn portfolio building. I think just because following someone else like me on YouTube who has a portfolio and just learn from one another as how we manage this portfolio. That's how I kind of run things a little differently. I know there's a lot of videos out there where it's focused on education, but either you have to buy a course for that, or they people are making educational videos, but I feel like the video was more of just beating around the bush, but actually not really getting into the meat of learning something crucial. For me, I'm an open book. I just tell you guys everything, and I think that's the passion for me to do YouTube here, and do this portfolio challenge to learn as I do it and share with you, and then vice versa. Also, for those of you who are new to the channel and you're not aware, I do have connections while doing this. I have a couple of groups of traders that I'm in contact with who can feed me on some trades. That way, I do get to build up a plethora of really high quality swing trades throughout the week. So if you are interested in that, I do have a Discord. You can join that group and I give you those trades live. Otherwise, if you don't want to pay for that, that's fine too. You can always just for free follow me every week. You may not get everything live, but I'm also willing to share some of the positions that I'm doing or what I'm doing with my portfolio, and that can still be very helpful too. But if you do choose to join the Patreon and follow us in the Discord community where we're constantly talking about stocks all the time, you will get access to my swing trades, and it's only $5 a month. And I don't think that's a lot of money. I don't remember the last time I went out for a meal and it costs $5 a month. So I think it's not very a lot of money, and you can decide for yourself. I think rationally, if you pay $5 for the service and you manage to make more than $5, then I think the subscription would be worth it. But if, let's say, you paid $5 for the subscription and then you lost money where you made zero from this help, then if it were me, I probably wouldn't continue paying either, right? So it's totally up to you. These are the options that I'm just presenting. Again, you don't have to do that. This is definitely like a no pressure kind of thing. I just want to tell you the options that are available based on what I'm doing and how I'm interacting and engaging with my community and my Discord channel and all that kind of stuff. All right, so I'm going to end it here, and we're looking forward to a bigger month in the month of June. More interesting trades to come.